Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 28th of May 2020, and yesterday we published an update video entitled Market Update 27th of May, Gold, Silver and Equities Rise. Now the video yesterday was published at 1940 GMT+1, and at the time we saw all equity markets were up and gold then stood at $1,713 and silver at $17.34. We pointed out that today the weekly jobless figures should be noted, the US figures, and were expected to increase by around 2.2 million, and that we should see silver attempt to reach 1750 with key resistance at 1760 and oscillations between $17 and $17.50. Well, at the time of writing, which is currently 8:30 p.m. or 2030 GMT+1, UK and European markets are closed, but US markets are still open for a little while at least. Now it's worth, though, taking a look at the figures. The Dow Jones is up 54 points at 25,602. The S&P 500 is up 25 points at 3,062. And the Nasdaq is up 41 points at 9,453. The Euro Stoxx 50 closed up 43 points at 3,094. The FTSE 100 closed up 74 points at 6,218. And the DAX index also closed up 123 points at 11,781. And the CAC 40 up 82 points at 4,771. So yet again, all markets up. Brent crude too is up 51 cents at $35.25. And WTI crude is up 85 cents at $33.66. Notice this creepingly rising oil price in US dollars. Not dramatically, but creeping up slowly. The dollar index, though, is down 0.61 at 98.45. And that is why perhaps gold and silver have been marginally up. On a rolling 24-hour basis, gold is up $3 at $1,717. In sterling terms, though, gold is down £3 at £1,395. That's because sterling has increased against the dollar. As I said, the dollar index had fallen slightly. And in euro terms, it's down €5 at 1,552 euros. So again, as you can see, dollar index has come down. Other currencies are strengthened partially against the dollar, and as a result, those prices have fallen because gold and silver were just marginally up. Now again, on a rolling 24-hour basis, silver is up 7 cents at $17.38. In sterling terms, it's down 1 pence at £14.11. And in euro terms, it's down 0.03 euros at 15.69 euros. The gold to silver ratio, in dollar terms at least, remains unchanged compared with yesterday at 98.8 to 1. Now, as we predicted yesterday, we did see silver hit that 1750 level today. In fact, albeit for a brief time, it actually reached 1753. And it has been as low as 1720. It's currently perched in between. And this does not surprise us at all. Equally, gold is in a similar position, having touched $1,740, falling to $1,694 at one point, and now is comfortably resting above the 1,700 level, the 1,700 support level, at $1,718. Now, yesterday there was relatively good US data published, with the Consumer Confidence Index coming in at 86.6 for May, compared with 85.7 in April. And new home sales for April were up compared with March, with 623,000 new homes compared with 619,000. Now today, the weekly jobless figures came in at 2.12 million, marginally lower than the 2.2 million expected, but overall, this means that in the last 10 weeks, nearly 41 million jobs have been lost. This is simply an unbelievable figure. The annual rate also for GDP quarter one second estimate, we had a first estimate which was minus 4.8%. This second estimate has actually made it worse, coming in at minus 5%. Durable goods orders were worse for April than March, coming in at minus 17.2%, and core capital goods orders were significantly worse for April than March, coming in at minus 5.8%, compared with minus 1.1%. Though ironically, it was arguably better than some forecasts that it would have been. Now, tomorrow is really important, with personal income figures, consumer spending figures, core inflation figures, and advanced trading goods, all for April, being reported. Plus, we have the Chicago PMI and Consumer Sentiment Index figures being published for May. Now, any surprises with these could have an effect on both the dollar, which has weakened today, as mentioned, and gold and silver prices. Now, next week, we have the most important data for the month, but we shall update that in our Saturday's weekly update and state why that is the case. Now, both gold and silver are experiencing resistance levels, and despite the dollar falling, equities are still in vogue, curtailing any major upward price movements. As lockdowns weaken or become less onerous, markets are anticipating some level of economic growth from the previous surrounding doom and gloom scenarios. Now, the GDP amendments, which I mentioned earlier, which were down 5% compared with down 4.8%, were disappointing. But frankly, our view is that perhaps the sooner the bad news is out there and published, the quicker markets as a whole can respond accordingly and hopefully recover. Now, the next few months are vital for the US economy, as well as for Donald Trump's chances of winning the election in November, which without any doubt his attention will be focused upon. Not forgetting also that there are enough seats available for grabs in the Senate, which could even change the reflection of that House too, if President Trump fails to pull a rabbit out of the hat or something out of the bag. Now again, we are positive precious metals, medium to long term, and this of course includes silver too, which has been the hardest hit over the years. Very short term, tomorrow's figures will have an influence, and next week will, in our opinion, set the trend for June at least. Central bank headlines are essentially all of them promising to do whatever it takes to revive the ailing economies. And trade disputes around the world, including that with China, are also causing some concern about the speed and level of any economic recovery. Now, we believe that most of the bad news for silver is already out there, or almost at least most of it. And therefore, whilst prices may dip a little with businesses starting back to work, we're of the opinion that on a percentage basis, silver may gain more traction than gold. We shall see over the coming months the gold to silver ratio adjust back to the early 90-1. But please do not expect silver to rush much above $19 anytime soon, with $20 being an absolute cap in our view for the next 3 months. We are expecting oscillations in the price for sure, but one can be moderately confident that current levels, or at least levels between 1650 and 1850, should be the average where we expect silver prices to lie. Now, those who buy physical silver will have seen premiums fall as we said they would. And while some are still a little pricey, their reduction has more than made up from the price rise, the underlying core price rise since March. And so physical silver should be cheaper today than it was 2 months ago, allowing for that reduction in premiums. And of course, it's now becoming more readily available. Still not as widely available as we would all like, but it's improving each and every day. Now, between starting this podcast and finishing it, which is just over an hour, we've noticed that the Dow has now moved into negative territory. You may recall that we mentioned that it was up 54 points. Now, at the time of writing, it's actually down 165 points. The S&P is up now just 6 points, compared with earlier up 25 points. And the Nasdaq is down 46 points, compared with earlier when it was up 41 points. And the reason for this really harks back to our warning that we have stated that we should watch the issue of China. And in the last 30 to 60 minutes or so, President Trump has stated he's making an announcement on China tomorrow. This has clearly spooked markets, and if there is follow-through tomorrow, this will prove good for gold and silver prices. You see what can happen in just an hour with these markets. Anyway, do share your thoughts as to what we've covered and where you think the markets are heading tomorrow. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting that we update our Richard and Greg channel every few days, and once again, if you haven't done so, please pop along to that channel and subscribe. Details of which we include in the description box below. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.